Manager, EME India at Franklin Templeton, India. And Hari, hi, thanks so much for joining us and good morning to you. First up, give us your sense on where you believe the market is headed in terms of the kinds of moves we are seeing on the benchmarks and also overall in terms of fundamentals. Do you believe that this sluggishness could come to an end anytime soon, or till we have some clarity on tariffs, this market momentum could continue?
Good morning. It's good to be here again. Well, the last time I'd spoken to you, we were in the camp that believes that there's going to be a bit of a range-bound markets which we will be in. And that continues to be the case, really. We have seen the markets doing very well, a sharp rally coming through post, April, May and June were particularly strong. We have seen that during this period, there's been pretty much a global rally. Many of the emerging markets have also seen a rally. So in the context of the broader world, yes, India has done well, but compared to many other markets, well, India has not maybe done as well. So for even the calendar year to date, you'll find many other instances of other markets doing very well, whether it's Europe or whether it's some of the Mexican market, for example, or even Hong Kong market. Those have done maybe even better than the Indian markets. We have been on our own cycle. So we corrected from September onwards. And since then, we have been looking for a pickup in the earnings momentum. The focus really has been on that. Unfortunately, the kind of economic or the earnings growth which we have seen, earnings growth momentum which we have seen from Q2 to Q4 is likely to continue in Q1 as well. So a single digit kind of growth which we are looking at. Earnings have been cut. We have seen a fair bit of shaving on the Nifty 50 earnings. So the earnings expectations going into FY26 are more muted than what they were going into FY25. That may be some kind of a comfort, in terms of for the downside for the earnings expectations. So the pace of earnings downgrade may be softer. But at the same time, we are looking forward to a pickup in the economy. So the market is right now caught between the reality of the current earnings growth, which is not very exciting, and the promise of a pickup in the second half of the year.
But you think right now, Hari, much of it is in the price already. In terms of valuation, what's a comfort level like?
So that is the valuations have gotten a bit more uncomfortable, to be sure. I mean, I think in April, we've gotten down to the large caps being at the long-term average levels. Mid and small caps have corrected as well in terms of the aggregate valuations. Having said that, now we are back to the situation where large caps are definitely one standard deviation, at least above what the historical long-term averages have been. So yes, there's already a fair bit of expectations baked into the valuations right now on the large cap side. On the mid and small cap side as well, we'll speak about the mid and small cap in aggregates, but definitely, I think there's a lot more dispersion in data which happens, or dispersion in earnings which is happening between mid and small cap. So we think that in the mid and small cap, you can still find opportunities, some opportunities to participate in the growth. I will note that there is a growth differential which is there between the large and the mid and small caps. So while the large caps are expected to grow at, let's say, about 10% in FY26, well, the mid cap earnings are looking at growing at high double digits, closer to 18 to 20%. I mean, that's what the consensus expectations are. Let's see whether those pan out, but definitely the growth expectations and what have been delivered in the recent quarters as well has been higher for the mid and small caps. And that makes the picture a bit more complex. If both are trading at high, I mean, one's trading higher valuations, but both have same growth, then it's one thing. But if there's definitely a growth differential, then the valuation picture relatively at least becomes more complex. Having said that, I revert to what I said at the start, which is that yes, the valuations have moved up since April.
Take is quite insightful, Hari. Good morning, and a little tricky question from here on for you, of course, for the interest of our market participants and viewers. We can't omit talking about the sectoral churning. I mean, there was a time when we used to get a sector which is performing and then it would stay for a month. But we see so much of churning these days. So what do you think, which sector will be the theme which will gain grounds in the coming quarter, or at least for the short term? And at the same time, if I give you a plain canvas, how do we paint the picture? How do we draw the portfolio for us?
There are longer term themes which are still playing in the Indian markets, but definitely, in the recent times we have seen a lot more. Every 2 or 3 weeks we seem to have a new flavor of the markets. Having said this, I think, as you said, looking at the longer term picture, looking at some of the broader trends which are emerging, one part of the market which we continue to be very positive on is the changing nature of the Indian consumer. As the prosperity moves up, we are seeing that new categories emerging. And so if you look at subsegments of the consumption, we see tailwinds for hotel, travel, eating out, or retail. There's a lot of opportunities emerging in some of these categories of consumption. So those part of the market, we continue to be positive. Those parts of the market we think are also going to be helped by some of the monetary and fiscal policies, which have, so the looser monetary policy, the looser fiscal policy as well, the tax cuts, they've not yet really reached the hands of the consumer. As these two, and the monetary policy also tends to play out with a bit of a lag, passing through of the interest rates will take a bit of time. All of these are setting up, consumption and consumer discretionaries to play out well in the second half of the year, or with let's say a 12-month lag from when the monetary policy and fiscal policy push started. So again, all of that is setting up for early 2026, late 2025 kind of a recovery on consumption side. On the capex side, we are a bit more cautious given that the valuations have moved up far more sharply there. They've never gotten really cheap, to be clear. Yes, we think that there could be a pickup in capex, and corporates have remained shy of leveraging the balance sheets. They have been spending, I think, through to FY24 at least, but FY25 was a bit subdued in that sense. There are drivers for capex to pick up, but the valuations are a bit extreme. So we are tilting towards consumption, towards healthcare services, all the places where you can see the consumer coming out and starting to spend.
Hari, yet another sector which we can't miss discussing it is the pharma space, and it has played the role of defensives in the volatile scenarios, as we clearly see. And pharma now is not just one sector, but it is now diversified to many sub-segments, be it the healthcare, the diagnostic, the hospital, the CRAM, CDMO. How do you see this sector supporting the market?
We continue to be positive on some of those themes that you have spoken about, which is healthcare services. Definitely, there's a longer-term theme playing. We're seeing a lot of new ideas coming in the market as well. So, I think, of course, with the insurance penetration picking up as well, healthcare services seems here to stay. I think there is a broader consolidation also which is happening. Growth is being driven by not just organic pace, which is also strong, but M&A of listed players with some unlisted players as well. As I said, the new listings also which are hitting the markets with newer themes along that side. So healthcare services tends to be something which we are broadly positive on. In addition, I think the CDMO side, the CRAMS and CDMO space, that's pretty exciting as well. And we've seen newer listings as well coming into the space. Those have been pretty interesting as well. So across the board, these are opportunities. These two spaces in particular, we tend to be a bit more positive on, more constructive on. CDMO definitely tailwinds from the China Plus One theme, which is gaining more traction as we speak right now. This means that the tailwinds for the CRAMS and CDMO will continue to play out. So these two part of the broader healthcare space, we tend to be a bit more positive on the core pharma exports kind of story. We are a bit more, I think a bit more stock selective, I would put it that way. And we tend to look at specific stock drivers when you're looking at what to pick in our portfolios.
Conviction coming in for the entire pharma basket, and when we say pharma, not just pharma, but the healthcare, diagnostic, laboratory, altogether the subsegments of the pharma. At the same time, Hari, there is a lot of talk about the seasonality factor, and yes, with the onset of monsoon, there are a lot of sectors which are in focus, and we see them at play as well. We did talk about the consumption theme, the FMCG, but along with it, the other sectors which are connected to this seasonality factor are the agri-related counters. We also see the tractor sales coming and doing the rounds during this scenario, this season for that matter. What's your take on the seasonality factor? Because we have seen the monsoon, onset of monsoon, which was early, and yes, in the entire country at present, we see it performing.
Well, stepping back and looking at it from a broader perspective, rural India has been in pretty good health. I mean, it's been contributing at least on the consumption side for sure. And most of the parameters coming from there seem to indicate that the health of the rural economy is relatively better off. Urban side, in fact, has been more of the lag. I mean, if you just speak about consumption. So broadly heading into the season, we have had monsoons hit early. It's been tracking higher than the normal trajectory. So I think we are setting ourselves up for a good, for continued strength in the rural economy. What we are hoping for is that the urban side also starts picking up and contributing to the overall economic growth. So yes, there is definitely the rural plays which would look interesting, which continue to provide strength to the Indian economy. But if you're going to see the next up move, it's got to be on return of the urban side as well.
Gives a lot of confidence. Thank you so much for all that taken analysis on the markets, be it the global as well as the domestic front. Hari, thanks a lot and have a nice day to you.
Thank you.
On that note, we slip into a short break, but there's a lot on the other side. You stay tuned with ET Now.